Good evening and welcome to the Australian Stock Market Show. Now, last week, the Australian stock market fell further and a few stocks are looking bearish. However, our aim as always tonight is to see if we can share with you some great stocks that look good. Now, our main topic for tonight's show, we take a look at the best bank stocks and compare them to insurers to see which one might get the best returns for you. First up tonight, we'll share our hot stock tip for the week. So sit back and relax. Tonight will be jam-packed as we answer your emails, take your phone calls and give you the answers to some of the important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox. And we're Australia's most trusted stock market educators.
Well, it's great to be back with you on the show. Now, I must say that I do like our topic for tonight as we take a look at the top banking and insurance stocks to see which might be a better buy now. We'll get into CBA, Bank of Queensland, Suncorp and Elders, to name a few. So stay tuned as we'll get into that very soon. But first up, we need to get into this week's stock tip.
Well, I hope so, but on your screen right now is a company called GRG. So it's an engineering company. So let me put my glasses on so I can actually see that. You can see here it's currently at $2.11. Sorry, did I say GNG, did I?
GNG.
Is it GNG? I got it right. No, I got it wrong. I got it right. Anyway, I'll keep moving on anyway. As you can see, it's a low volume stock. It's not a huge one with only 348.06 million in market cap, but it's paying a dividend yield of 9%, which is great. And on the back of your show last week that you did with Pedro.
That would fit well, wouldn't it?
Or should I say your excellent show with Pedro last week.
Thank you very much.
I decided when I watched that show that I can retire.
That's what he thinks.
But looking here, it says they're an engineering services company, is into provision of high quality process and detailed engineering design. What does that actually mean, Janine?
Detailed engineering design, well, if it's in mining and minerals processing industry, it could be all sorts of design concepts that they're into.
Perfect. So it could be into anything, but it's part of the materials sector, so you would think it would actually have its fortunes on the materials sector.
Yeah, no, we did talk about that, didn't we? Because we have seen stocks like Worley, which was in the energy sector, and it tended to move with the energy stocks. And you and I would be scratching our heads saying, why is it moving? Because it's a different type of stock and it doesn't justify the fall that we were seeing. Well, I guess this stock could be linked in the same way to the materials sector if a lot of the stocks get sold down. However, is it hot right now, or is
Well, we'll have a look at the chart. Let me bring the chart up and have a look. What do you reckon? Does this look really hot or not?
Well, look, at the moment it's just holding ground, but it's more or less sideways. So long term, we're expecting a bull move on it based on the overall analysis. However, we need to wait and see if it jumps one way or the other, of course. So if you had asked me 2 months ago, did I think it was hot, and I would have said yes, but it's amazing how a week or so, a month or so later, that can change. And that's why we have to be really careful with where we mark where our entries and exits are. But it's really quite easy to do on this stock, and that was really the point of the example that we've given. Yeah,
well, I'm just going to put a couple of things on the chart that I prepared this earlier, if I can get my clicker to work. So I've just put on some basic resistance sort of levels up around here, and you can see it's really up just above previous all-time high. So that one's back in July 2012 at 230, and more recently it hit up there at 248. Obviously this one here at 240, but it's still in that range at the moment, which is interesting. But long-term momentum is right up here, and it keeps respecting this. It came down to that in April this year, and it's taken off from here. But it is looking into this sort of sideways holding pattern, which has been very common that we've seen since COVID. We've seen a lot of stocks in this sort of sideways pattern. But having a look at this is what we're seeing here, is that sideways pattern through there. And you see this beautiful move up of this major low, beautiful move right down into this low here in April. So look, I think this is just a stalling before it really starts to take off. But let's have a quick look at the weekly chart. And again, if you see that, if I bring that up so you can see it a little bit easier, there's a lot of sideways movement, a lot of resistance around that sort of 228, 230 area.
It'd be interesting to see what that sell-off was all about about a month or so ago. Yeah. And I mean, that could be just confirming support, because there is strong support around that dollar. What is it? $1.80? Is it $1.90?
Oh, down around there. Yeah, it is. Yeah.
Oh no, higher there. Just that trough there.
This trough.
Yeah. If you look across to the left, you can see it goes all the way across.
Through.
So we just now need to see it get back above that dashed line that you've got on the chart, and that could indicate that it's on its way, and it could make a new all-time high. However, in the short term, we're watching the downside for that trough there at around $1.90 to make sure if it goes through that low, then just wait.
I agree. As long as it stays above this and moves up and closes above that on a week, I'm happy with that one. I think it's pretty good. That's my tip on GNG.
Fantastic. I'm glad you got it right. And your bits are all together? Everything's fine now?
It's a 3-letter word, so it's okay. If it was a 4-letter word, it'd be tough.
Okay, that's it for our weekly hot stock tip. Shortly we'll get into the main topic for the night, but before we do, right now it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 039290 9988. That's 039290 9988, or you can text your question to the number on your screen.
Now, the first caller into tonight's show right now gets a free copy of my book, Accelerate Your Wealth, so make sure you pick up your phone and dial 039290 9988 right now. Now, while you do that, tonight is the 5th Tuesday in the month, which means we've got a big surprise for you. So tonight, we're actually going to take a look at a different type of chart than you're used to seeing. It's called a relative rotation graph, and we'll look at the top 20 stocks on that. So let's get into that right now.
On your screen right now is the RRG chart of the top 20 stocks. Take it away, Dale.
Now, you can explain all that, can't you?
I was just leaving it to you. Look, I think it's interesting to see how there are so many stocks that are actually in that top half of the chart. So stocks like Woolies, ANZ, Rio, FMG, BHP,
all of it's up
and
there.
Brambles is way outside that. Obviously, because it's a more volatile stock, it's heading towards the outer skirts of that whole shape of the chart's making. But Telstra is actually heading in the right direction. CBA is heading in the right direction. NAB, Westpac, even CSL.
And CSL. You know what I bring this chart up quite regularly on my Monday market reports. This one, I also bring up the mid-cap 50. I also bring up the telecommunications.
It's great that you keep them updated.
And I work with everyone just to really find opportunities, because I find this is the best chart to really find stocks from my watch list, and I love it. And one of the first things I always say to everybody is, look at where the majority are positioned. And the other week, if we go back, you can see how they change positions if we're going back. So where are they? And sometimes you'll see them more on the bottom half, sometimes you'll see them more on the top half. But what I'm looking at here, we're seeing more on that left-hand side, which means the market will be a bit more bullish as these stocks go, because as we know, the top 20 stocks actually pretty much run the market. So what we're seeing here is, looking, if I just scroll it out so you can see Newcrest, it's really, there's not much down in this section at the moment, and there's more up in here, as you said, the top half. So this doesn't look like a bearish market to me when I'm looking at this RRG graph. And I'm seeing opportunities, because as they move into this pink section, I'm seeing NAB, CBA, CSL, Macquarie, Westpac, even Coles
hitting there,
and Transurban, they're all looking at possible buys in the next period, because they're looking really good. But you are right. Anything, if they're further out on the axis, that means they're more volatile, like Woodside's more volatile. But I think it's going to be a bit longer to get in for that kind of stock. At the moment, what I would expect Rio, BHP and FMG to do is instead of starting to point down, to start to point back up again. Because you see, if I go back a little bit, you see BHP was up. And if I keep going back, it was down. So it turns down and up all in that same quadrant. So I'm expecting it to probably do that again, and obviously FMG, Rio as well to go with it, possibly Brambles to go with it. And if we get them going up and the banks moving in here, moving up, then I think we're going to have the banks and the materials companies all working together. Now, of course, that's all thinking, but it may not actually happen, because at the market at the moment, I think, has been held back a little bit by what's going on in Gaza at the moment, because they're worried about possible the conflict growing. If it stays just between Israel and Palestine, it might be okay, but I think if it escalates bigger, which it has the possibility to do,
Yep.
I think there's going to be a lot of worry about the market, so it might be our market might stagnate. But as I was saying on my market report yesterday, wars are generally good for the market.
Generally,
Generally really good for the market, not necessarily during the war, but as soon as it finishes. So I am liking the market at the moment. I'm not super bearish on the moment.
Okay.
There's a lot of signs for me to be bullish. So,
All right.
anything else you want to say?
Well, that is it for our thoughts on the top
Obviously
20
not.
stock. No. Now let's get into our first question.
Alrighty, our first question is from Andrew, who says, "Hi, Dale and Janine. Now, further to your recent coverage on short selling and the observations found on ASIC reported daily short positions. Question, is there a percentage number as noted in the percentage of total product in issue reported as short positions that would ever create a level of concern? Looking at an example of Bank of Queensland and acknowledging recent commentary by Janine and Pedro, which was last week, I believe, that the stock is still in a downward trend, contrary to their general thoughts. In viewing the reported short selling positions noted at 8.59%, would it be fair to say there is a correlation between the two elements, and should one monitor the short positions in high percentages or high percentage cases, conducting the overall stock analysis? Love the shows, the people, and most of all the course. Kind regards, Andrew." Now, just to explain this for you, Janine, I had a question on my Monday market report on short selling and what it means and what you should look out for and all of that. So I did bring up the short selling list that we talk about with our students, etc., and saying, but at the time I said, look, it's not really something they need to focus on, because we've seen plenty of stocks that have been heavily short sold before, but they still keep rising, you know. And I quoted one of Harvey Norman constantly being short sold or being a large percentage short sold. But I think you'll give your opinion on what the question was, because they got mine on my market report the other week.
Well, look, to a large degree, stock specific. So that's why I look at it. I know it's percentage wise, but I've looked at this over time, and sometimes I've scratched my head over it. But the problem is that it's actually delayed as well. So you don't get to see it right in the moment. And I think that's wrong. I think they should have to report much sooner. There should be more transparency there.
There's no reason why they can't be, you know, doing it live, really, couldn't they? But
exactly.
it would a stock with a high percentage short sold, and there is a limit to short selling on a stock that ASIC has around, and the ASICs have rules around that of how much could be short sold on a stock. But is a high percentage short sold unnecessarily concerning thing for you?
Look, I would be watching it closely, especially smaller stocks that are more vulnerable to the volatility. But I mean, stocks like JB Hi-Fi is a classic one of they're often picking on, I guess you'd say.
Yeah, another one,
for short selling. But you know, you just got to get to know the stocks that they tend to target.
Would those stocks with the high percentage short sold, I'm still asking questions on behalf of Andrew here, would you necessarily see it on the chart before you even looked at that percentage short sold?
You're more likely to see the exits trigger before that happens, because if there's a flood of selling, it's often a secondary move, not a primary move.
Okay, so what we're telling Andrew is it's interesting information, but don't let it run your life.
That's right.
Is that really what we're saying?
You get a bird's eye view, and it's good to study, but you can become a bit of a, I guess you could become a bit of a boffin doing it rather than, you know, really practical in what you're doing.
All right, Janine, we do have a caller at the moment on the line. We got Chris there? Hello, do we have Chris on the line?
Yeah, g'day Dale, Chris here. How you going?
Very good, mate. Welcome to the show. Do you have a question for us tonight?
I sure do. Been looking at S32.
Awesome.
I haven't sort of done a huge amount of research on it. I've just put a couple of trend lines on the weekly chart and just sort of sitting and waiting. Looks like it's potentially finding some support around that 50% all-time range coming up. So yeah, just sort of waiting for it to pop above that trend line and show signs of moving up.
Okay, you sound like one of our students, are you?
Yeah, I've just started Module 4.
Awesome. Are you enjoying it?
Yeah, it's awesome. Love it.
Just one little tip, and we're going to answer S32. I love the stock. I've been waiting for it myself, so I'm going to be excited when it gives me a trigger as well. So, but one tip I'll give you is, because you're in Module 4, you've got access to Trading Essentials, that service, which means you can fill out your trading plan, do your back testing and all that on S32. And I'd encourage you to do it, because they're going to give you a much bigger support than what Janine and I will do tonight. But use the service. The more you use those guys, the better you're going to be by the time you finish the course. So pick their brain, and you tell them that Dale said, I can annoy you as much as I want, not what you want, okay? So you got my permission to annoy the crap out of them. Cool.
I actually sent him an email today on FMG that I have back tested, so I thought I'd just save this one for the live show tonight.
Perfect. So you're looking short, medium or long term on this one?
Probably short to medium.
Okay, cool. All right, Janine's got it up there. She's had a good look at it and she'll give you an answer. Thanks for giving us a call, Chris.
Now, Chris, one thing that I'd be saying to you is that with the back testing, I know he's gone, but I've just got a tip for him. Now, I don't know if everybody still gets told this these days, but what I used to always say to people when they're doing their back testing is you need to leave it for 3 days before you send it into us. Because...
What is that?
Because in most, well, we don't need to do the work for you, is basically it. Because in 3 days, you come at it with a completely different set of eyes, clear mind. But you know what it's like when you write in the...
He's excited. Get it sent in today.
No, because he can solve his own problem or his own issues with it, and it's going to actually give him more aha moments if he finds them himself rather than being told.
Problems.
Well, rather than him being told that he's missed something, you know, it's better to actually discover it yourself, and you've got the knowledge to do it. So it's only 3 days. Give yourself that leeway, and you'll come back completely fresh, and you'll spot all those things that you might have missed the first time round.
Can we get on the chart now?
I've said my piece. Thanks, Chris.
Talk about S32.
S32, good stock, really, actually, great stock. I really love this pattern that's unfolded on S32. Some people will think, oh, that looks terrible, but we actually get excited because we know what comes after this sort of pattern unfolds.
Because we thought, well, you were actually saying only a month or so, you thought this was going to find support soon.
It looks good, yeah. Look, the risk is that we said that it could come slightly down lower to around about this level, which is around the $3 mark. So if it takes out this low here, then obviously you're still going to be sitting there waiting, rubbing your hands together for when they're better. Do you want to make that bigger so everybody
can see it?
Oh, look, we don't want to get a magnifying glass out.
Since I've been around, you got in some bad habits.
Yeah. Well, look, when Pedro was there, of course, you know, I kept him on his toes, but, you know, I've got to keep you on your toes. It's a different story.
You do that all the time.
All right, now we can see there's a nice little trend line. That's why we like it. This low was taken out, which, you know, in an ideal scenario, you'd like that one to be higher. But look, it's not the end of the world. I'd just ideally like to see it come down closer to $3 before it breaks through the line. However, it looks really nice.
I like it. I do like it, and I'll be waiting to get above that trend line.
Yep, it's a really good stock to back test too. It's a good one for, I think, for beginners to really get, you know, their head around S32.
Oh, look, it is, and it's not a hard stock to trade. I've traded it myself. It's not that hard. It's easy to back test, as you said. Good rules on it, and it's steady. So I love it. So well done, Chris.
Well done, Chris. Well, Dale, gee, the show's going so fast, it's flying, and we've still got loads to share. Our topic tonight is all about whether you should buy the top banking stocks or the top insurers. And of course, we'll get into which stocks will have better growth in 2024 and over the next 3 years, which is important.
Well, we'll also share some great insights with you about popular banks and insurers.
Now, just before we get into that, I want to share a quote. Any mention of Warren Buffett or Berkshire Hathaway is sure to grab attention, and with good reason. Buffett said, insurers receive premiums up front and pay claims later. This collect now, pay later model leaves us holding large sums of money we call float that will eventually go to others. Meanwhile, we get to invest this float for Berkshire's benefit. What a brilliant man. I guess just when you actually understand what he's done, in doing this, in buying these insurance companies, it's just phenomenal, isn't it?
Well, they are cash cows, aren't they? Because they take all this money in, a little percentage of it goes to paying their expenses. Well, I don't know how little, but a percentage of it goes to paying expenses. Yep. The rest sits in a big bucket.
That's right.
And then what do you do with the bucket?
Well, you just invest it.
Just invest it. So no wonder Berkshire Hathaway is the price it is and how successful it is, because they use it to buy companies and they're using other people's money to make money for themselves. I mean, that's Isn't that how you do it?
When I think of the word float, I'm thinking that's keeping them well above water, isn't it?
Well, it is. Yeah, people pay their insurances. You know,
Yeah.
I mean, you do get when times are harder, people tend to sort of knock back some of their insurances.
I wonder how that
but-
works. Like, if you paid it all up front, you'd think the insurance company would give you a bit of a bonus for paying it up front. If you pay it in 4
You do.
instalments.
Yeah, you do. If you pay 12 months, you get a slightly cheaper premium than if you pay a monthly instalments. You do that. But
Maybe I'm talking to the wrong insurance company.
You're not talking to my guy, that's for sure. I hammer him every time. I go, hey, geez, look after me.
Yeah.
But the thing is, that's what you do, because obviously there's a big bucket of cash, and you just don't put it in a cash management account and a poof.
Well, other people are earning the extra interest on their money.
So they would have an actuary working at how much of it they could be putting into the stock market and good quality investments to earn higher yields, not just dividends but also capital gain, and then compound that. And obviously that's how they survive so well and what it's done. Smart business.
So what do you think will happen going forward in terms of these big sums of money? Do you think they're more likely to pile that money continue to put that into growth investments, or do you think they'll put it into cash investments given the current climate?
That's a good question to ask Mr. Buffett.
Balanced portfolio.
Balanced portfolio. Okay, can we move on?
Okay, Dale, out of interest, how about we take a look at the growth in Berkshire Hathaway's float? Get ready to be blown away.
Jeez, that's impressive. The caption on that reads, if you look closely, it says Berkshire Hathaway's float, which is their cash money, their pool, is crucial to its long-term success. I'm sure it is. Since acquiring National Indemnity in 1967, its float has grown from $19 million to $164 billion. That's a whopping
732% increase.
That's a lot. No, last year, Berkshire Hathaway acquired Allegheny. Is that his fate?
Allegheny?
Allegheny, that's the reason, which boosted this figure another 12% year on year. So that's a huge increase, isn't it?
That's massive, isn't it? Now, how's that for leverage working at its best? Part of the premium they get pays expenses, and the rest is set aside to pay future claims. And it's basically free money to invest.
Well, you can understand why Buffett prefers to buy insurance companies and not just buy their shares.
Yeah.
Now, normally insurance companies invest funds in relatively low risk investments, but not Mr. Buffett. His success has been because he has invested in higher yielding investments.
Now, as investors, we cannot buy the insurance company. We can only buy some of their shares.
Well, that makes sense. But put simply, insurance companies take insurance out, and then what they do, they take insurance out on the insurance that they issue, and then they hope they don't get hit hard by insurance claims. But we have seen a lot of that happening over the last decade, haven't we?
So true. Now, for individual investing in these companies, particularly general insurers, the timing of when they invest is critical, which is why you need good rules. In times of higher interest rates, we know that insurance companies can make more on their excess cash or float.
Now, banks too can make higher returns when interest rates rise, but their risk also increases. So, given we have high interest rates, is now the time for banks or insurers, Janine?
Well, before we answer that, how about we start with a historical comparison chart to show the difference in performance between the banking sector and some of the major insurers this year. Then we'll share something we very often don't.
Oh, so what research have you found?
Wouldn't you like to know?
Well, that's what I'm asking.
But you'll like this, as it is what investors need to understand. So let's get into the charts.
Alrighty, on your screen right now is an historical comparison of QBE, Suncorp, IAG and Elders and the banking sector. So that's what's on there, yeah?
So at the top, there's QBE, that's the one in red. So the whole idea of this is to really look at the angle. This is how I use it for anyway, to just say over the last year, we can see how there's been a rise. QBE, Suncorp, IAG have done quite well.
QBE's done a lot better, hasn't it?
QBE's done a lot better. It has indeed, you're right. And Suncorp, more so than IAG in blue. So QBE in red, Suncorp, IAG. Now we've got the banking sector that's in the middle. So you can see it's just flat. And we know that the banks have been just going sideways. But look at Elders. Elders has been in a steady decline, in a complete contrast to what's happening with Suncorp, IAG and QBE.
But does Elders more or less run on the farming sector in terms of if it's in good, Elders does better and the farming sector is doing bad?
Well, look, traditionally it has. I mean, look, there are people who go directly to Elders that are not, they might be in country areas, but they may not necessarily be in farming that might use Elders. So, but it doesn't necessarily, match that it should be or have anything to do with the share price falling necessarily.
Okay.
Okay, it's about the cycles on this stock, and when I look at Elders, I think, to me, that looks like an opportunity.
Well, that's what I was about to say, because this looks like a huge opportunity for me when I'm looking at it. It looks like the best opportunity for me.
Yeah, in the short to medium term. I mean, QBE still, given how it's been unfolding, we're going to have a look at the stock charts of these stocks soon to explain all of that.
Okay.
And do a comparison. But some of these stocks we're going to be looking at after the break.
Okay. Oh, okay.
All right, next we will examine the historical data of 4 stocks. Let's take a look at this spreadsheet first, and then we'll get back into the charts and share the stocks likely to perform best.
Alrighty, on your screen right now is a table showing the yearly growth since CBA first floated. So we're going to bring up that spreadsheet now? No.
Just talk a bit more about the 2 sectors for me.
Oh, I've got to ad lib for a while, do I? Because you haven't got it up. Is that what you're talking about? So talking about the insurance and banking sectors, obviously when we're looking at both of those, especially in higher interest rate environments, they both do quite well. Obviously the insurance companies, if they've got invested in conservative assets, they're going to be investing a lot more in cash products, which they tend to do. Unlike Mr. Buffett, if you talk to those insurance companies, they're using bonds, more capital stable products, those sorts of things. Whereas obviously banks, it depends on how much money they pay or they get for the money that's coming into them. I don't know. More recently, we've seen some of the banks play around with their deposit rates to attract different people, because obviously with the RBA rate, that's a certain money or amount of money they've got to pay to get their money. But and obviously they put their margins on it. But generally in interest rate environments like we've got, or higher interest rate environments, they both make more profit. But I'm sure Janine will have a few words on that when she finally gets her spreadsheet up. How are you going with that?
I'll have more than a few words. You know me.
I know you've got more than a few words. Have you got it up yet?
Look, it's very close. So, look, insurers generally, they've been tainted with the brush of disasters. So as soon as disasters
they did. We've had fires, we've had floods, we've had all sorts of disasters going on.
And look, I don't blame you.
And that's just in my backyard.
If you sometimes turn your nose up at the insurers, I know you do.
I do. Sometimes, I've never bought an airline, and they're the ones I don't buy at all. But I have bought insurers in the past, but they're not one I buy a lot of. Because they can have issues where they fall out of bed. And I sort of learnt that back in that September 11th thing. I owned QBE before it. I sold out just before using a trend line.
That was worked well for you, didn't it?
Plains Heath Buildings in QBE fell out of bed. And I remember doing a seminar with some people, and they go, oh, well, your trend lines wouldn't have picked QBE falling out of bed. And I heard, well, let's have a look. And then the whole room went silent. I went, wow, I was out 3 weeks early. You could
hear a penny drop, I bet.
You could have heard a penny drop, so yes.
Look, on your screen now, I want to share this with you. Now, remember we did this some time ago and we looked at the banks only.
Correct.
So we looked at the big 4 banks to see how they performed over time. So this is actually showing on the left-hand side every year for Suncorp that it's been trading on the market, open, high, low, closing price for the year, and the growth in that year. Now, anything in red shows a negative return. So, but in summary, when we get down to the bottom, we can see that for Suncorp, surprisingly, 70% of the years it's been positive, and so we've had 27 years in total, 19 years positive, 8 years negative. That's got to be something that's worth
better than
looking
all
at.
the banks.
So can I convince you by showing you this data and showing?
But that's better than the banks.
Someone else that I know.
The banks are all 66, 67-ish, 68. What did you say? Oh.
So let's keep going.
Well, we won't listen to that person.
All right then. Elders. Now the same thing. Let's just have a look over the history of Elders quickly.
Well, that's a different story.
You can see there, 1991. I've got data for this stock.
Wow,
I'm not saying it doesn't go back
117%
further,
growth.
but looking at all of the negatives here for the data that I've got, there's a big bank of negatives, and we know that the GFC really hurt Elders big time. But it's really struggled after that, couple of years negative, couple of years positive. 106% there in 2017 was nice. It can have some stellar runs. There's really good growth if you can get in there at the right time, but you can really be hit, 2 consecutive years of negative growth.
Much more of a trading stock.
Yep. So we're looking here 33 years and we've got 17 positive and 15 negative. Now, you might say to me, well, that's 32, but we could have a year where it's flat. So there could be a 0 in there somewhere as to why the data's showing that.
But that's close to what NAB does, about 50-50.
Yeah, 50-50. So, the risk is higher, but when you can get in there, if you can look at some of those positive years, it's doing well. Commonwealth Bank. Now, go back and look at Commonwealth Bank.
Most people think Commonwealth Bank is the best bank in Australia for growth. And, well, yes and no. It is at the big four.
Well, we looked at Macquarie last time,
better.
didn't we? And Macquarie and CSL were actually really good.
Correct.
1991, we can see back here some really great growth in there initially. It was incredible stretches of positive returns and only a few negative.
Yeah.
GFC happened, we had negatives, but it still struggled around the Royal Commission.
Yeah.
And then, but we should be getting back into that period of that long, strong growth again. Yeah. But at the moment, we've got a negative 6% return in 2023. So just watch this space, I'd say. But 33 years in total, 22 positive, 11 negative, and still a really good result. 67% is pretty good still overall. So happy with Commonwealth Bank. Now, Bank of Queensland was the other one that we had talked about at the start of the show. Bank of Queensland coming back up to the top, 1985, started off negative, some really good stretches. You can see some good gains in there, 80% in there. A couple of negative years, again, some good years. A few small negative ones in there, but really good stretch we had there from 2000 all the way up. That was for the GFC, which we're not in that sort of pre-GFC boom period yet, but we will be. So 44% drop in 2008. We can see it really struggled in the wake of the GFC. And then through the Royal Commission, some negative returns in there. But it's really been hit and miss, right, for the last few years overall, if we're looking at these calendar years at BOQ. But eventually, this stock, when it goes, it's a really good trading stock. It's a really boomer. So we're looking at it, though, 39 years, 24 positive, 14 negative years, 62% overall. So lower down on the scale, but in a couple of years that could change if we get a run on the banks again.
I mean, we did a couple of podcasts on the top 20 stocks doing exactly this, didn't we? Not long ago. So it's a really good thing to do. So
here's a quick summary: CBA, Bank of Queensland, Suncorp, Elders. And we're looking at the positive years there now. I was actually going to do one over the last 10 years to see what it was going to do. So they're not negative, so just ignore that. I just have to hide that. I'm going to do that for next time. How's that?
Okay. When's next time?
So we'll look at, well, there will be another one.
I'm just asking how long I have to hold my breath for.
In the next quarter, we'll do another review just to see where everything got to.
I might still be alive by then.
You're a very healthy man, that's all I can say.
Is that all for that? Is that what you've...
That's all we've got for that.
All right, well, Camille, that was really great. Now, I'm assuming we're going to more of those spreadsheets and on your favourite stocks in the bonus content after the break. But now let's get into the charts of those stocks, Janine, because I'm sure everybody's going to be interested in that.
Yeah, now look, you and I have to decide what we're more likely to go for. Are we going to
banks?
That's what I thought you would say, banks. But look, I'm actually questioning...
Your job is to convince me to go for insurance.
Well, do we take a balanced approach is what I'm saying and have some banks? I know you like banks because looking at Bank of Queensland, that's a big turnaround opportunity when it eventually goes.
Correct. Yeah.
Banks are trading sideways at the moment, which makes them reasonably low risk. But if they continue to fall, then that's a different equation. You can't just hold on to banks forever just because they're banks. Sometimes you actually have to offload them, accept the risk, and if there's a loss, then you accept it and just wait until there's a better time to be holding them when you're more likely to get those double-digit returns. So that's the situation with the banks.
That's a huge growth opportunity or turnaround opportunity, isn't it?
Well, Bank of Queensland, I wanted to start with being the second-tier bank because of that. So if we're looking across here, we can see huge support for the share price, which it's just traded through. But, there's this whole sideways move here where there's loads of support back in the 90s we were talking about before. And I think we're going to eventually we'll return to seeing this sort of growth that we saw from 2000 to that high in the GFC. We just need to see this cycle pan out. And it could be that Bank of Queensland just has to come back and test that low there in April 2020 before it then makes the next move up. But nice trend lines you're able to get on all banks as part of these declines, which should make it really easy to trade when the opportunity arises.
Yeah, I do like it. I mean, I know after the GFC, they became the poor second cousins because their cost of funding went through the roof.
That's
Where
right.
the big four banks didn't have that. And then over the last few years, I think since the Royal Commission, that's been readjusting a little bit.
Yep.
But I do like this stock. I think it's good. I'm excited.
Excellent. So that's Bank of
So you haven't
Queensland.
convinced me of insurance companies yet.
Well, let's just have a look at the opportunity in CommBank. So CommBank's been consolidating sideways at this high. Now the question really is that a topping pattern typically, or does it look more like a consolidation as part of a big run?
It looks more like a consolidation to me.
Yeah, I'll
really
just
does.
expand that out and we'll just see. So what would you expect to see at a top? I mean, before the GFC, we saw this sort of thing. It went sideways for 3 months and then plummeted. Before the Royal Commission, we had this high here, a reversal, and then it fell away swiftly. Before COVID, we had a quick reversal. In this period here, we had a couple of months sideways, but then it went strongly down initially and then sideways and then down again. Here, we're just stuck sideways, waiting for direction, and we don't have any yet.
I think that's just a sign because there are so many stocks, and we just obviously my hot stock was the same, isn't it?
Yeah.
There's so many stocks over the last 3 years that just been in this sideways pattern. It's not a topping pattern. None of it looks like a topping pattern. It looks like a pattern to me when the market's not sure of the upside potential, but knows they're not worried about the downside potential.
So they're not selling it off hard.
They're not selling it off hard because the economy's not bad. It's okay. I mean, our GDP figures and everything are okay, not great. We're just
Do you think that
treading
there's
water.
concern that that the oil prices could spike and therefore that could lead to higher
That's
inflation
part of it, yeah.
because of
Because
what's
obviously,
going on?
if the war in Gaza increases and things happen and oil prices go through the roof, if other countries get involved in it, that will be weighing on the stock market if that happens because of what could happen.
Banks have investments inadvertently through a lot of different
They do.
energy. That they're invested in energy in lots of different ways.
Oh yeah, absolutely they are. And to me, that's where I think the market at the moment is just sitting there. And obviously our banks are really, really strong. If we're talking about the US, total different ball game.
Yep.
Their cash market is in trouble. Their banking market is in trouble because they have a different banking system over there and how they do banks, where ours is very, very robust, and especially our big four banks are some of the best in the world. So I'm not worried about our banking sector. But
do
to
you
me,
think the
there's-
overseas
there's-
market is viewing us in the same way because we're so connected to the US?
No, I don't think they are. I really don't think they are, and especially because they know our banks are very good banks.
So do you think it's just then because we've opened up our market with the Royal Commission, the outworkings of that, you've heard me say this plenty of times before, was the fact that we sold off all of our broking Australian, a lot of the trading here used to be done by Australian companies
Correct.
and big banks. Now it's done by international companies that can loan out the stock to big hedge funds in a big way.
Well, that's what I hate, and obviously you do. So all the prime brokers, and what a lot of people don't understand is brokers. If you're trading through CommSec or any of the brokers in Australia, they're not the ones actually doing the transaction. They're feeding it through.
CommSec's different because they held on to their broking arm.
They've held on to theirs.
Westpac, NAB, ANZ,
Yep.
let it go to a third-party provider.
Well, they're one of the prime brokers.
So therefore, that's the situation we're talking about.
Yeah, but ASIC did that because they pushed up the amount of money that you had to have and hold to do that. And so unless you're a big broker, you couldn't do your own brokerage. You had to go through a prime broker, which did all of that.
I just think it was great that CommSec and Commonwealth Bank held on to their broking arm.
I didn't know they held on to theirs. Sorry, you're more informed than I am, as usual.
Yeah, they were my hero during that whole thing.
Okay,
All right,
so
now,
that's in a holding pattern.
It's in a holding pattern.
I do like it.
So we just have to wait and see what happens either way. But CommBank, just because it's CommBank doesn't mean we should keep holding it, because if we just look at what happened during the Royal Commission, nobody thought that CommBank would fall into October 2018 the way that it did.
No, it didn't. Well, we didn't know. But at the moment, we're still on that seesaw with CommBank because there's no... Whilst I don't think it's going to fall away, it still could.
Yeah.
And that's why we need to make
Because
sure
the hedge funds could get their hands on it.
I really do like CommBank, and I think it's a great stock, but we still, given we can't predict volatility, we can't predict what's going to happen in Gaza, but we always need to protect ourselves.
Just in case, yep.
Just in case.
Okay, so that's Bank of Queensland and CBA. You want a drum roll?
Okay.
All right.
Is that enough?
Elders, okay. Elders we're looking at here. So we're looking at a dash, I've got a dashed line underneath this low there.
Yeah.
What do you think about what's happened with Elders, and what do you think is more likely to happen from that point?
Well, based on what you're talking about there, that's probably going to find some support.
Right.
That's been heavily hit. I mean, we're talking a stock that's over $15 that's now around $5. That's huge.
Isn't it?
That's getting to pretty close to a good support level.
Yeah. So that's totally different to what we're seeing in the other big, let's just pan out for a minute, because investors need to get an understanding of what they're into. So this is what we were talking about before with Elders, a huge difference. It doesn't mean that Elders has got that same upside potential. It may never get back to those highs, but
isn't it really a different company than what it was back then?
Yeah, well, I guess you could say that, but it's still, we go by the chart, don't we? And we do say that it's just a pattern that we're looking at. But looking at this picture here, we could argue that eventually it's going to track back up again along that line going up, and that it could continue to move up. Just got to continue to watch Elders, but I do like it. Sun, looking at here.
Why have you finished with Elders?
Did you want to talk more about it?
Well, I'm sure we could speak a lot more about Elders, isn't it? Because I think, look, this is an exciting looking stock to me, because obviously what we saw on the chart earlier, that spaghetti chart that you showed us, it's holding up. It's
do you want to see
big
how
fall.
far it's fallen?
Yeah, please do.
All right. Sorry, I didn't mean to cut you off there.
Well, you didn't cut me off, but I'm just
64%.
saying. Because it's gone down 64% since its high. So I reckon if that got to 75%, which is not too far away, so around 75% in that, which is pretty close to around some of these other levels that you've got through here as well. So I think it could find some support in there, and if it does and start to look nice, so this could be a really nice buy moving forward.
Yeah.
I don't discount this could be a nice looking stock, but if you look at that weekly chart, and it hasn't really found too much support yet, but it's just bouncing off.
It's too early. It's too early.
It's way too early,
Yep.
but if we get this sort of, where's the trend arrow?
We need to see a retest of that low.
Yeah, so what we
rise
need
off
to
it.
see is we need to see a move up through here, come down and have a higher low, and then start to move up through there. But if I saw that over the next couple of months, I'd be clicking my heels and going to Kansas with this
volume's dropping off. We need to see the volume pick up a bit as well as it does that.
Only on the upside, yeah.
It was still really strong there on the selling, but at least it's dropped off on the selling here. It's very, very low now. So that could mean the turnaround is coming in as well.
Yeah, absolutely.
So that's Elders. Let's just go across
You
to
can move
Sun.
on, that's okay.
Oh, thank you. I was just, wanting to hear the magic words. Now, Suncorp, we're seeing here, it's such a checkered history. How do you, read a stock that's gone from, let's just look at this. Rio was a classic one as well. It had a significant dive in the GFC. 80.8, different sector, of course, but you'd expect that sort of thing out of mining stocks.
Well, you would, wouldn't you?
Yeah, and we saw this with property shares, and we saw this with insurance stocks, that these big falls. Typically, the banks were around that 50-odd%. The market was around 50%, but these stocks fell significantly further. And that's something to really bear in mind. If we have a look at what happened during COVID, and we come back here, where are we, 2020, we see that it had a fall down about 40%, which is in line with what the market had.
Yep.
Hasn't recovered above the pre-COVID highs, so there's that upside potential there. And I just think that, that Suncorp could be tracking along in this direction over time. So that's a possibility.
It is a possibility that it could be doing that. Look, this stock has always surprised me why it hasn't performed better. There's a good company. They used to have some brilliant products.
Yep.
And I used to use a margin loan with them and everything. And to me, they were really, really good company. But for some reason, the last few years they've been unloved. But they've done a few things the last couple of years, more recently, that have been really good for them. They've sold off, or they were selling off one of their areas, wasn't
Oh,
it?
ANZ was, got knocked back. That was
They got
a real,
knocked back, was it?
Yeah, that really upset me. That the ACCC
Because they were trying to get rid of their banking arm, wasn't it? Yeah.
Yeah.
Yeah, that's what it was. I couldn't quite remember all that. I knew you'd remember because
But it's okay for an overseas company to come in and buy that, but it's not okay for a homegrown to pick it up.
I'd rather ANZ buy it than somebody else buy it because it would be much, much better. But looking at this looks really nice, doesn't it? It looks really, really nice, and it's just a nice steady growth. And even our market's been bearish sort of the last 2 months, it's held up.
Well, I'd just be waiting for it to come back a bit and see if it falls away a little bit further first. But, if it does and then it moves up, that could be quite nice. But the downside risk is, have they already run their race? And that's the thing that you and I guess, could debate here. And in the argument that you've got for banks is because where's the opportunity, given that it's already hit these strong levels?
But they've been held back for so long.
Haven't
That's
they?
the point is people love banks, people love to own banks, people love to hold them in their portfolios, and they've been held up, obviously the major banks, the big four, because of the Royal Commission. But the banks have been on the nose for the last 7 years.
Oh, yeah, since the Royal Commission.
So when's their time in the sun?
Yeah.
And once they start to move and get going again, I think the snowball will start to happen. That's what I think.
Well, look, in theory, we should see banks and insurers move up together. That's really what should happen.
So we should have both.
We should have both. Well, that's it for our topic tonight, and we've still got lots more to get through. But before we get into some more stocks, for those watching on YouTube, you can watch all of tonight's show, plus the bonus content where we get into lots more stocks. And you can do this by simply taking a couple of minutes to secure your free 7-day subscription to talkingwealth.com. You also get to watch Dale's weekly Australian stock market report, where he shares his view on the market, where opportunities may arise, along with lots of stocks to put on your watch list. It's now time to pick up the phone and give us a call on 039 290 9988. That's 039 290 9988, or you can text the number on your screen. Whilst we wait for your call, let's get into our next email. Now it's time to get into our next email, which is from Dan, who is a talkingwealth.com subscriber. And this was originally for Dale's market report yesterday, but the email was sent to the wrong address and got missed. So we're going to answer it here for you, Dan. And Dan says, "Hi Dale, I got TLC on my watch list. I don't hold any of it yet, and it looks like it's fallen to some support levels. It may be a good buy sooner or later. Any opinion you can share? It will be great. Thanks, Dan." There we go.
Well, I thought I'd put that in for Dan because I found it today. He did.
That's very good
I
of you
tell
to
them they've
pick
got to
that up.
send it to my Talking Wealth email address, but people forget.
That's okay.
But
We'll
so
forgive you, Dan.
We'll forgive Dan this time, but I'm not sure why he thinks it's going to support level because they're saying it could be falling to support level and start to rise, but they could always do that. But is it doing it now?
Well, can we just, if we're just looking at this on the long term, is that all the data there is? It's
That's all the data there is, yeah.
Yeah, did you check it? I'm just double checking your check.
You can check if you like, check.
All right, so look, that's it. And yeah, it's very hard to tell, like Dale's saying, but I guess, it's possible it may have finished its fall.
Well, it could be, but has it? And it's not really showing any signs of strength. I mean, we've had 2 days of data in this last weekly bar, so it's gone up yesterday and today. But outside of that, you need to assume it's going to be bearish. So where's the support levels on this? And after, look, we've got that double top there at $5.35. And then we've got $5.35 exactly.
Yeah.
You probably think it's maybe...
I mean, it's a good
may have
example,
some
isn't it,
support.
of a double top, given it's such a simple chart, 'cause there's not a lot of history on it. But, you've nearly got a 20% fall there.
Yeah, so do you think it's fallen to the support level?
Look, I think there is one there. If we go back across to the left-hand side and we stick a horizontal line across here, we can see there is something there.
Oh, you're just making things up, aren't you? You're just trying to support Dan, aren't you?
I am indeed.
I'm trying to be the hard nose and you're trying to help him.
Look, I agree with you in the sense that there's not enough data to really be, have
Well, there isn't
clarity
at the moment.
about it.
And at this point in time, it's conjecture because it doesn't matter whether it's fallen to a support level. At the end of the day, is it giving you a buy signal? And this is weeks off buying. If it does show some support here and start to move up, it's really weeks off getting a buy signal because there's definitely no trend line down there. And I'd say it'd be more than a month, maybe luckily may not even get a trend line down there. So what
Good
other
point.
rules are you going to use to get in on the stock? But we'll easily be 4 weeks out of a buy, maybe 8 weeks or even 12 weeks out of a buy on this one. So at the moment, it's just conjecture whether it's fallen to a support level or not.
Okay, so what if it kept falling?
You sit back and wait.
And what if it rises from here?
Then you sit back and wait until it gives you a buy signal.
Well, it looks like we've got a text from Melissa, and the code is LLC. Melissa owns it, bought 2 months ago, and is going down. Our thoughts? Well, Melissa, we're just going to help you out with this one. It's an interesting stock. It's all a guess, isn't it, really, at this point? I mean, the fact that it's gone through those recent lows and on the monthly chart, it's looking strongly now below that. It actually traded through a really important support level. So the risk right now is that it could take out, given it's made this last move down, it could take out that low in 2009.
This one over here, yeah. She didn't tell you where she bought it. She just said 2 months ago,
2 months ago. So that means, if you look at...
So she bought it on this month.
Just go look at, look around that price there, 760 or thereabouts. If she's bought it at that.
Did she say 760?
No, what's the price for?
Sorry?
What's
I'm
the
just saying
percentage?
she bought it 2 months ago. So this is October. Obviously that's September. That's 2 months back. Is August. So she bought it August or September. But where she could have bought it, because obviously at this point in July it looked like it was doing all right. So she may have bought it on there, but let's see how far it's fallen, because from that high it's fallen 29%, if you can see that. So depending on where she bought it, she should have had a stop loss enacted by now, but at very least she probably should have had an exit strategy. If it went below that line, you get out.
Weekly close, monthly close, whatever it is,
Weekly, monthly, whatever it is, because when it's gone below that low there, the downtrend is continuing, so therefore
sometimes when stocks have been down in that long-term decline for so long, they can just turn and reverse after doing that. So, you saw this big bar down here, it turned and reversed back up, but it was only temporary.
And it kept moving
So
down.
even if we saw a strong move up next month, it still could be temporary.
Could be, yeah. This month there's only bad news for, was it Melissa?
Melissa, unfortunately.
Cool, all right. Well, we do have another email, and this time, let's get into our next question, which is from Jack, who says, hi, Dale and Janine. Dale, in your market report back at the beginning of September titled, It's Time to Put Appen on your watch list, you mentioned Appen could be a buy after it hits its bottom. Can I get your thoughts on now whether you think it's a buy for the long term, 12 to 18 months? I am a young investor and only have a small position size to use. Additionally, what kind of stocks would you recommend me to invest in with a long-term mindset and a small position size? Cheers, Jack. So I did talk about Appen a little while back, because I've been watching this for a long time. It's been on my watch list, but waiting for it to find some support, but it's not.
Well, look, I like the shape of the chart, so I can see what you're saying in terms of this symmetry of it. It's really nice, and this is what you'd sort of see, a longer rise on a stock and then a sharper fall, but that general shape coming back to test this low here. Now, did the recent low take out that prior low? Do you know? Have you looked at it recently?
I haven't looked at it in a couple of weeks.
Okay,
no,
so what's the price down here? It's about 53 cents. And it's trading at around
about 86 cents there, something like that.
Yeah, so it hasn't quite taken that out yet. But I guess we were talking about it last. It was around this time when it was trading sideways, and there was a chance it might move up again, but it hasn't. So you just literally have to give up until you just have to wait and see if it does recover. Who knows what could occur?
Yeah, well, I think if you draw a line across here, I was starting to not wrong. Move it down to where
you were getting concerned once it went through there.
I was looking at, I think, around here, I believe, from memory, or roughly around here, saying, well, if it starts to move up, it could be one to watch. And
but you wonder what's going on, don't you? Because, I mean, this new CEO took over some time ago, and he had this great story, what they were doing to support AI, but I don't know.
I mean, I don't want to get into it right now because it's still going down, and that's what I want to tell Jack.
You can't say that.
It is still going down, but it's slowing down. Now, look at the angle here and look at the angle here. I mean, it took a big dive here sideways, so it's not wanting to push further down. But if say
you had this on your watch list, right?
Yeah, I do have it on my watch list.
How often would you look at it now? Given
I only look at it once a month. I don't need to look at it weekly because it's not going to give me a buy signal in the next month. it might show me support or it might show me some strength in the next month, but it definitely won't show me a buy in the next
people,
month.
long-term buy and holders had held that and they've held it through that big rise and fall. Should they sell it now?
Well, to me, it's really based on where, if they've bought it, I mean, depending on where they bought it. If they bought it right up here, you're talking about it's gone from $42 down to
almost zero,
under $1. So they've lost nearly all of their money. So if they put $10,000 in it, they might have $500 in it. You know, so they've got to look at it and go, well, is it going to go further down? Well, possibly. Is it? But the further it goes down, the more it becomes a takeover target too. If it's a good company, like Appen is a good company, so it could become a takeover target.
Okay.
So to me, it's like you got to weigh that up and go, should I sell it? Should I not? Should I keep it? And I think if you're in it now and you've ridden this whole wave all down, not if you bought it through here and you know it's down 15 or 20%, well then you probably have a different decision to make.
Yeah.
But if you've ridden the whole wave, I'd just sit there and wait because it's like, what more have you got to lose?
That's
if you
true.
know what I mean?
That's
and
a really good
possible
point.
upside potential. So that's my thinking. But lastly, Jack asked about any stocks that he should be looking at, so you can answer that.
Well, look, I mean, I guess it's always the top 20. That's the really easy one, top 20. But I'd start looking too at the mid-cap 50 because there could be some opportunities coming up in mid-cap 50. That's always a good area to keep an eye on, isn't it?
If he's a Talking Well subscriber, he can watch my recording 2 weeks ago.
Great.
And because I did the RRG on the top in the mid-cap 50s and we found a lot of nice looking stocks.
Excellent.
So
That's
you
what we
can
want
look
to
at
see
that. So
more
go
of.
to that, Jack, if you're a subscriber. But we do have another text come in, and this one is from Jacob, and Jacob's asking us about Linus. He says it's spiked up. Do you think it will continue to grow? Looks to have found support at the $6 mark, and he's asking us for our thoughts on it. So has it got support at the $6 mark, Janine, and what do you think of it?
Well, look, thanks for your update on this one because this is actually one that we watched and we put it on one of our shows not long ago, and we've been waiting for some sort of sign that this stock is going to turn around, thinking that it could fall further, but at the moment it's actually holding up nicely. If we just, well, first of all, look at the monthly chart, because what we were looking at was the fact that it was trundling down and had not confirmed that the bottom was in yet, and could take out that, could take out this low and keep going, further down. But this reversal that we're seeing this month, if that holds up and then the stock moves up, it's more likely to go up. I just think that looks really nice so far, but it's really just a little bit early to get too excited about it just yet. So let's just see if we can get a trend line on there from that high. And bringing it down, you can see it's a little bit far away from the line, but it may just try to move up into that zone of the angle of that overall move.
Do you know what I've noticed? I find I've found more lately in the last few months is we keep saying trade on confirmation, not speculation. But the last sort of this year, that statement has never been more validated than ever, because I've found so many times people go, oh, I think this stock has found some support, and it goes down. Then the next email, they've found support and it goes down. And sometimes we're going, well, that looks pretty good. If it goes up a little bit, it could be a buy, and it goes down.
Yep.
So to me, it's nothing more certain than you need to stick to that rule. Is trade on confirmation. So whilst we can think, hey,
whilst
this stock
looks like it might be turning,
maybe
there's no
finding some
confirmation.
support at $6, and the question is maybe finding support, not is finding support, and that's why we need to confirm it is finding support. But then we need to say, okay, if it's confirmed support, now we have to confirm a buy signal.
Okay.
And not too many people, I find, are judging support too quickly now.
I agree with you. That's just an overdone area, isn't it? And then if we look at this, I mean, it needs to really get above all of that first, because what a lot of people do is they look for these reversals and they try to buy it based on the earliest possible time,
because it's found
nuts.
support, and it hasn't really.
And often now what we're seeing is that shorts get unwound, stock prices jump off their lows. Some of these big funds try to trick traders into these trades, and this is a classic example of what it looks like.
It could be, yeah.
But the good thing about it is the volume's high. So we've seen this high volume with a reversal. That's a tick, to start with.
But is it short sellers covering some positions?
Well,
and
that's
cleaning
the
out
thing.
positions?
It could be. Let's just see, is that low there? That low is $6.02, and now we've got this low at $6.02. So it's at the same level. So that's really interesting to see.
Do we have to watch this one later on, hey?
We do, I think so. Well, that is all that we have online as I liked it. Thank you very much for that, and we hope you've enjoyed our show on YouTube. Remember to show your support for us by commenting below this video after the show, because we'd love to hear your favourite part. Also, give us a big thumbs up. It helps new people discover these videos, and we'd appreciate it if you show your support and subscribe to our channel. That helps you as well, because you know when we go live. For those watching via Talking Wealth, stay tuned for the bonus content we promised.
In next week's show, we take a look at the technology stocks to buy. We'll also answer your questions and so much more. So make sure you put next Tuesday night's show on your calendar. Also, give us a big thumbs up and subscribe to the channel. As always, thank you for joining us for now. Goodbye, good luck, and good trading.